What's going on, believers? Happy Monday. It is time is about 5:45 p.m. Central Time, almost here in good old Chicago, Illinois, in the beautiful country of the United States of America. And I'm just gonna do a monthly outlook as well as a weekly outlook for the month of October, as well as I guess you can kind of call this the second week, which it technically is the second week. So let's go ahead and get to the economic calendar. So bank holiday in Canada, as well as a Japan holiday, as well as here in the States, potentially something to do with fuck Columbus or something like that. Fuck Columbus Day or something, I don't know. But yeah, so that's pretty much today. Last week, of course, we had a non-farm payroll, right, which is that first Friday of the new month, whatever week that falls in. That'll be NFP week, so I had all of that fun business last week. This week, actually, I'm looking forward to there's actually a lot of volatility as far as the current status in global affairs. So Israel has been attacked by a group of people that are being labeled terrorists, and the media that I am shown here in my country. And so it's lots of just continuing of just uncertainty with a lot of global events going on, a lot of just world's always got some stuff going on, right? But with the time that we live in now, how fast information can travel, we just kind of get bombarded with things every day, I feel like. And so we just have become numb to it in a sense, but the amount of events is definitely ramping up in my opinion. But yeah, so as far as, again, just a lot of economic reports coming out, as well as just developing news as far as things that are legitimately happening around the world, life and death type things, right? But focusing on the economic calendar, right? So I do want to just mention those global events though, because as someone who is learning about these different financial markets and how they're all connected and things like that, real life events 100,000% affect the prices in these markets, the volatility, the interest of investors, all of that, right? So it definitely ties into it. But as far as just my method, because I can't forecast any of those events happening, I just have to play it by ear upon the time of me hearing about it. But with the economic calendar, the cool thing is these things are already scheduled ahead of time, so it's always something where I can come back and just double check certain dates for things that happen around certain times on that day. I can go back in the past, and I can also look ahead in the future for as far as they have these events planned out for, right? But yeah, so as far as I was just mentioning though, the highlights for me from the economic calendar, while there are lots of catalysts as far as economic calendar and real world events, the highlight for me from the economic calendar is PPI and CPI. So PPI typically would be the second report released, but for whatever reason, this week is actually going to be the first. So here, 7:30 a.m. Central Time, Wednesday, October 11th, here in the United States, right? We're going to have our PPI report released Wednesday. Then the following day, which is backwards than what it's been all year, we're going to have CPI released same time following day. So Thursday, October 12th. Right, Thursday, October 12th, 7:30 a.m. Central Time. CPI data will be released to the public here in the United States. Okay, so those are two things that I'm looking most forward to expecting the most volatility potentially from those, but lots of other news hitting the marketplace for a lot of different countries. So lots of volatility is, long story short, about that. Now getting to the charts, my favorite part. So again, there's going to be a monthly outlook here. So going to start with the monthly chart here, dollar index, right? My right hand man, king, right? Dollar is king. Long live the dollar. So from this consolidation that it had been in essentially since the end of last year, right? Once price rallied up into nearly hitting that 115 level and pulled off of that high, returning back down to sub 100 eventually here in July, coming from the high that it put in September of 2022. So just looking at this fractal of price, so coming from these lows to the high and then pulling back and getting into a consolidation here. So what I'm looking at here as far as just for the month, right, as I'm seeing here, the dollar was able to reprice up into this inefficiency on a monthly last month. This month has so far exceeded last month's high, but has then turned around and traded back down into the range, right, of last month. So my reference points of significance as far as a monthly time frame, really is the main level is going to be that 105,896, which is the low of the inefficiency here. And then the next level that becomes important to me actually becomes the swing high just below there, which is actually then this month's high, which is basically that same level, right? It's just below it. So that's 896. The high of this candle, looking at that top left by the H, is 883. So 13 pipettes off from that actual low of the inefficiency. So no reason for me to really have to annotate that level, especially just, looking at the monthly here. In my mind, whatever happens at this 896 and the 883 is going to be rather identical as far as the higher time frame responds to that small range. And I'm not really looking at the dollar from any smaller time frame than the 15-minute, to be honest, even if I'm looking for scalps, because anything lower than that just doesn't really hold enough weight structure wise for me. The dollar just sometimes can do a little bit too much for my my taste. But so within this range also, and this is where laziness is nowhere near tolerable by me, or like even just the acceptance of it isn't even tolerable by me, right? But as far as doing your own due diligence, one thing that I like to do with, especially with larger inefficiencies, is I'll take a Fibonacci with the settings set to only display the 25%, the 50%, and the 75% range, or levels within this range, right? So just to give you an example, from this low here, which is the high of the inefficiency, to this high here, which is the low of the inefficiency, right? Measuring from this low to this high here, what I want to see is, okay, so that range is a certain amount, right? It's a distance or whatever, if you will, but that distance can be broken down into half, right? That's where I find the half point of this imbalance and efficiency. But then each half can also be split in half, right? And that's where I'm going to get those different quadrants, right? Where I have a 25% of the range level here, another 25% or 50%, right? Level here, and then another 25% level here, and then of course on the extremes there is the 0 and 100% as well, right? So that's what I'm talking about as far as doing a due diligence, getting the Fibonacci, making the settings to display those levels within a range. If you place that over here, what you'll see and what I was able to see was this was a perfect rejection pretty much off that 25%. We took that high without actually hitting the 50%, and now we're back within this range. So the reference point on the high end that is most significant to me is actually that 25% of this range, right? Which is pretty much this high. But again, the reference point that's important to me is actually the 25% is range, and then above that is the halfway point of range. So I'm looking at those, right? If dollar wants to continue higher, I'll be monitoring the shorter time frame price action around that area to look for the reaction, most likely, right, to continue towards that 75% and towards the high of the imbalance, or to potentially, right, stay in some sort of consolidation, right, or to make another attempt running lower, right? But that's just speaking about the process of once it gets there. It has to first get there, right? So I'm gonna drop down to weekly real quick. And so as far as this weekly is concerned, what I'm looking for here is last week's low. So the dollar was able to pull off, it was 11 straight up close weeks, was on the verge of a 12th, but it did close bearish, right? And with the delivery and price, this was actually the first time where a previous week's low was the drawn liquidity for dollar. And so that is actually what the drawn liquidity is for me, just keeping it simple, right? Took out this high and then closed back within that range as a bearish candle. So to me, I'm interested in seeing this low being taken out. Point blank, period. Drop it down to the daily chart, right? So from the daily perspective, now along that weekly, there were no weekly, right, draws on liquidity of a previous week's low, but there were draws on liquidity towards previous day's lows that were never hit during that nice sustained rally, right, that dollar just went through the past 3 months. So in similar fashion with last week's low, right, being that draw on liquidity, since the dollar hasn't officially closed yet for the day, and because based on the structure of the daily and how last week ended, Friday's low is actually, from the daily perspective, the drawn liquidity. Like I said, the dollar chart actually closes for the day here in a couple of minutes, so it's most likely not going to reach this. The drawn liquidity then, because of this, it actually still is bearish, but now basically the low of today, which is about to be solidified in a few minutes, will then become the drawn liquidity for tomorrow, technically, when the dollar reopens around, I believe about like 6:45 or something like that, when Central Time, when the dollar's going to reopen. So upon that reopening and a new, right, daily candle starting to print, then the low of basically Monday, right, because Monday will technically then be yesterday, in the trading world, the way that the trading hours per day work. So then this would be the drawn liquidity, right? But long story short, lower prices for dollar until it takes out these two previous days lows. Also, what this is doing is confirming Friday as a swing low, right? It's got a low with a higher low to the left and a higher low to the right. So that solidifies this is a swing low, which is sometimes a bullish signature. But what it also is doing is it's also solidifying, validating, making official, right, a swing high as well, because they're just high with the lower high to the left and a lower high to the right, right? So it's confirming a swing high and a swing low with this candle. So it doesn't really indicate more bullish or bearish to me. Just indicates indecisiveness, right? Low probability more than anything. But I'm going to be looking for, like I said, Friday's low and Monday's low once Monday closes here in a few minutes. So that is a dollar chart. Now going to the indices, NASDAQ and SPX are going to be very similar. Dow Jones, US 30 is going to be a little bit different, but we'll break that down, right? But so my biggest concern here, or the thing that I'm thinking in my mind is the most important, is this monthly inefficiency, which was traded 2 here, saw a nice rejection, right? Traded to and through here with the close below. Now seeing that so last month's low on Nasdaq actually showing it didn't take it out. I want to just confirm that by looking at the current quarter's contract and just double check here as well. Okay, so actually looking good. So Nasdaq has not taken out last month's low, so that's actually really good. Something just to take note of, right? So Nasdaq has not taken out the low from September quite yet, but it is in this rally here from very near, right, September's low. So again though, in my mind, what's most important here is essentially this range, right? And just the high and low of the range. Now in similar fashion, right, is a daily or is a monthly inefficiency. So the quadrants of it, right, at some point were super important or had the potential to be super important, but with the way that, right, price is traded to it and through it here but rejected, to it and through it and closed, right, and then for it to open up with a gap higher, so it actually opened up inside of it as far as the month is concerned, and now it's working within that range, right, after seeing initially an attempt to go take out that September low, failing to do so, right, now running back within the range. As you can probably eyeball, it's above that 50% of the range currently, right, but it's a monthly candle with 3 weeks left, so that's not officially any sort of data that can be used. Just to keep in mind though, right, as far as ranges are concerned, I like to know about where we are in comparison to the 50% of the range. So with it being pretty high within the range, right, like I said, the high end of it as far as the monthly is concerned, that 15258 is actually going to be very important to me as far as a monthly level, right? And of course, like I said, the low of it, and then just, right, the low from September, which Nasdaq failed to go and take out. So now looking at it from a weekly perspective, so given the structure and price delivery and everything like that, how last week closed, drawn liquidity coming into this week was actually last week's high. So Nasdaq has since open already done a lot of movement, and it's also reached and engaged the liquidity above last week's high. Currently still above that high, but that price point from last week's high is going to be a very sensitive area for me for the whole rest of this week. Drop it down to the daily. Now as far as, again, the daily structure and how price was delivered last week coming into this week, Monday's drawn liquidity was Friday's high, was able to engage with that liquidity, close above it. Now going into Tuesday, which is, yeah, as you can see, the new daily candle has already started for the indices an hour ago. The drawn liquidity for today is Monday's high, right? So very simple. It's not a lot of points as far as right from where it's at now to getting up into the high. But the cool thing is that that high is a really solid scalp target. As far as price is making its way up there, should have no problem at all hitting that level. The reason why I'm not concerned about necessarily predicting what may happen next is because if it gets up here, engages this liquidity, and then, right, uses the high end of this monthly inefficiency or something within that area as resistance to then continue lower, right, then I have to utilize that level. Not that I have to, but it would make sense for me to utilize that level on a lower time frame to see if I'm seeing some sort of pattern basically on a lower time frame that indicates, right, on a lower time frame and provides an entry and a small loss and a couple of targets, right? That's what I want to use that reference point for, as far as having a higher time frame key level or a higher time frame reference point in which I'm using to locate lower time frame entries, right, for a trade idea. because these high time frame levels, from my experience, are always the best areas and highest probability areas to get involved with a move in price. But now that, like I said, NASDAQ and SPX are pretty similar, so I'm actually going to reverse Outlook ES. I'm actually going to do it from the daily up, right? So if you recall from NASDAQ, that brown box was that monthly inefficiency. Same thing here with ES. But the difference is ES is still in the lower portion of it, the lower half, as opposed to NASDAQ being near the higher end of it. But the cool thing about that is, so around that 50% of that range, there is this high, and above that high, there is this candle here that created a sell side imbalance, buy side inefficiency, right? This fair value gap here between this candle's low and this candle's high, right? So that's right around the midpoint of this monthly range. So the reason I like this is because what I notice about price, and shout out to ICT, is that price is either moving to an inefficiency, right? So it's moving higher or lower to fair value gaps, basically to the imbalances, or it's moving higher or lower to liquidity, which are basically highs and lows. But the most liquidity, right, or the strongest, or the the largest pools of liquidity, I imagine would be below and above swing lows and swing highs, right? That's where I would imagine the largest pools are built up around those areas, right? Because they stick out like a sore thumb, right? So these are areas that to a trader would look relatively safe as price is leaving away from it, right? So a lot of liquidity in the form of new interest in getting into trades, but also a lot of stop loss liquidity as well. But so just again reiterating, right, that the market has been bearish, and so I don't want to like try to call a bottom or call a top. I just want to ride the order flow. So coming off of these lows, could be starting to see some sort of shift, right, in structure. It would start with this high being closed above. So we've traded above this high, hasn't closed above it just yet, but that would begin technically a market structure shift, right, where there's this high, there's this low, price takes out this high, and then I'll look for some sort of potential retracement lower before it continues higher. So it's very possible, as far as the way that price is setting up. Took some high time frame large liquidity over here to the left, or right, filled in some inefficiencies to the left. So some sort of retracement higher, seeking buy side, or to right rebalance some of the imbalances, just makes a lot of sense from a logical, efficient, market standpoint. But so now, with that being the daily, let's move up to the weekly chart. That's on the weekly chart, the way that price delivered and the weekly structure, right? At the close of last week, the drawn liquidity for me was last week's high. S&P has reached that drawn liquidity. Looking at the weekly here is a very large fair value gap, so this is definitely one of the ones where I'm measuring out, right, that 25, 50, 75% levels, as well as, right, referencing the high and the low of the range itself. So giving me 5 levels to work with in these larger inefficiencies. Okay, so now with, like I said, so that was a drawn liquidity. What it does at this level or above it, once it gets there, is now how I can qualify further, right, trade setups for the week. So I do like that now I have a really important level, right? That last week's high, it's been engaged, right? Price has worked it on the lower time frame a few times, so it's probably even left clues already, or areas already around this level that can be utilized for scalps and day trades and potential swing trades for the rest of the weekend, for the rest of the month. But so that's the weekly right there. Now going up to the monthly, seeing that picture as far as what I mentioned now, right, about this monthly inefficiency, we're still sitting on that lower portion of it. The halfway mark on that daily chart lines up, right, with some resistance on that time frame. Also now seeing from the monthly, that midpoint also lines up with the low from August, right? So an old monthly low could also be a very sensitive area in price. So wouldn't be surprised to see if it does work its way back up to that midpoint of this range and starts to slide lower, while Nasdaq may want to work the high end of its monthly inefficiency before continuing lower, if lower prices is what's right on the agenda, shaking out a lot of those shorts as it pushes back higher, right, inducing a lot of buyers in that don't want to see it drop, and then once it hits the flow, right, can wipe all of those traders out in one fell swoop. So now I'm gonna, last but not least, US 30, start with the monthly. As you can see, there's no inefficiency here because it was in the consolidation for a very long time on the monthly. But an area that I'm really interested in, you can't see it here, it's going to be on a lower time frame, but it's going to be in this range as well. Something down here within the wick of this monthly candle from March 2023, there's going to be a low within here that was a catalyst for printing this higher high, right? These highs over here made it above this high, so this is setting up for something that ICT has titled a breaker. There's this high, there's a low, there's a higher high. So once price closes below the low that put it in the higher high, that low becomes what he would call a breaker, and he mentions this to be one of the more powerful entry techniques that he has developed in his concepts, or discovered within his concepts. So just want to make sure that I can see this on those lower time frames as I work down to them and try to get some sort of a refined breaker here. Essentially what I'm doing here is this would be the validation for a higher time frame continuation lower if US 30 gets below the midpoint of a bearish breaker from the higher time frame. Now this is right, like I said, I'm looking within this area for it on the lower time frame because it needs to be a down close candle from the understanding I have from the way that this tool has been explained. Right, so let me start doing that. Let me drop down to the weekly, and then just to be clear as well, as far as the weekly draw, right, is last week's high. So 30 has not yet reached like Nasdaq and SPX have, right? 30 still got a little bit of a ways to go, another 100 or so points to get up to that last week's high. I do like that there is this imbalance here, right? So in similar fashion to Nasdaq and SPX, continuation higher is leading straight into potential resistance areas that could easily be catalyst for, right, sending price to print another lower low so far for this decline that's began since like that second to last week of July. But so again, that's that weekly perspective, and then like I said, what I want to see here overall is this type of structure, right? There was this high, then there's this low, and then eventually there's a higher high. And so to refine this now, right, then I'll refine it to just this last down close candle over there. And so how this works is now I'll just look at it from a weekly perspective because I actually have a down close candle here now at that low. And like I said, the halfway point is really it. So I'm looking to see when there's more price action within this range, right? I'm looking to see it right around where the title breaker is. If I can get some candle body closes on a weekly time frame, like around that midpoint or even below it, that gives me confidence that now this area, although it could potentially be a high resistance liquidity run, just meaning that price has to like grind its way through there as opposed to just being allowed to just slice right through it like a hot knife through butter. So if it does have to dig that way into here, the coolest thing about that is, with me understanding beforehand that it's happening on a higher time frame range, that dig down into here to set it up where it doesn't look very obvious about the explosive push lower that's going to happen as soon as price is free outside of that range, right? So that would actually give me a lot of confidence for day trades or like a lot of scalps within this range. Whenever highs on like the hourly time frame, even maybe even a 15-minute time frame, whenever those highs are taken out, to then look for a reason to go short, targeting a short-term low that was put in before, right, that high got ran. That's going to make trading within this range all the way down very easy, in my opinion, and it's a 1,000-point range nearly, so there'll be a lots of scalps in within this range of 30, 50, 100 points, back and forth, to be completely honest. But I'll mostly, like I said, be focused on the shorts once there is some sort of weekly confirmation, right, at least below the halfway point via a candle body close. I get that, I'm ready to rock and roll. And I get that, and that happens around the same time, right, that NASDAQ and ES have done what I was looking for them to do. And let me just drop down to the daily here now. But yeah, so they can find resistance at some of those areas in similar fashion. Like I said, the last week's high is still the target here, and it's still bullish for now. So as far as them all in a situation, right, where there are levels that they could trade up to still and not negate bearish higher time frame, right, bias. And so just with that little quick scan right there, I was able to see, right, obviously all of them still looking for yesterday's high now to be taken out, but then there's also some highs to the left, right, that could also be reached for this week, and then could still see a nice sharp turnaround. Just thinking in terms of NFP week last week, 30 wasn't able to do so, but NASDAQ and SPX, right, they all did open up with a gap, and then they all traded lower before like Wednesday turned around and trading higher. Now Friday, NASDAQ and SPX got crazy and made new highs of the week, as you can see here, right. This high took out Monday's high, so made a new high of the week, right? And then this was Monday here, this was Friday, so Friday took out Monday's high, so definitely made a new high of the week. And like I said, it all started on Wednesday, that turnaround, right? Everything started turning around on Wednesday. Same thing with Thursday, everything started turning on Wednesday. So with the dollar bearish right now, right, and I'm looking for lower prices in dollar for it to seek some sell side liquidity after attacking buy side for 3 months straight. And while it's doing so, right, and if it continues to do so, then I'm just gonna look for the opposite in the US stock indices, right? Keeping it super simple, no complicated methods of trying to figure out any mathematical equations or anything, right, rocket science like. Just keeping it super simple. Higher time frame momentum, in a sense, leads me to believe that more likely than not, right, these are the areas that price will be reaching for. And then there's so many different ways on the lower time frame to really get in there and look for any type of excuse to press the buy or the sell button, right? Obviously pressing the buy button if I'm expecting higher prices, pressing the sell button if I'm expecting lower prices. And then there's 3 different types of management I always mention, right? The trade needs to be managed, the risk needs to be managed, and the self need to be managed. And so that's gonna be the end of my TED Talk, though. That is my analysis for the month and for the week, and I hope that everyone has a blessed, peaceful, and happy rest of life, to be honest. But just let's finish this year strong. Shout out to the believers, shout out to the homies that inspire me to be better each and every day. I love you, appreciate you more than you ever know. Y'all take care, peace.